On today's podcast, I've got Alan Edwards, who is the founder of Evoke Solutions, a new company which we'll talk a little bit more detail about later on, no doubt. I came across him on LinkedIn. I said it'd be really interesting to have him on and find out a bit more about him and a bit more about his business. So welcome, Alan. Thanks for coming on.
Yeah, no, thanks for having me, Gary. Appreciate you letting me on. I met on LinkedIn a couple of weeks ago. I as well very recently started becoming more public of my Bitcoin interests, and obviously Evoke as well, which I took the jump several weeks back to do this full time. And be interesting to speak to you today and get into the nuts and bolts of things.
Cool, excellent. Well, the first question I ask all my guests is, what's your earliest memories of money?
When I was probably maybe about 9 or 10, I was then getting aware of, you ask for things when you're younger and your parents usually say, no, it's, costs X amount or whatever. And then I remember vaguely adding everything up in my kitchen. So my father was out and I was adding everything up in my kitchen, like, oh, toaster. Well, that must be £5. And then when he came home, I'd said to him something along the lines of, oh, I reckon you spent £18,000 on stuff in the kitchen, and then I'm in another room doing it. He's like, stop adding everything up. And then that was my first memory where, my parents bring that up and they laugh. I used to calculate everything. And I've always been, I'd say, very aware of money. I've always had a real interest in business, and, even you look around wherever you are, and I always find it fascinating that anything you see or touch, there's a business behind it, and somebody has created that, a lamppost. Someone's out there making lampposts, and that has always fascinated me. So I've always been very aware of money. And then throughout my career, I obviously, became qualified. So I qualified IFA, and then that was where it really got a bit serious, where you really understand, the value of money and more so how it's working in the background or not working. It's always been a big interest of mine, but I'd say from quite an early age, I've always been, I think, quite aware of money. So I think it certainly helped me throughout my career as well.
So adding up the value of everything your parents spent, was that a bit of a leverage for you to say, look, if you can spend 18,000 on a kitchen, you can give me £2 to go and buy some sweets or something? Is that how it worked?
And and also it makes everybody aware, right? But yeah, certainly it's good leverage. You add it all up, and you spent £40,000 on stuff in around the house. Why can't you give me £5 of Pokemon cards, or it was back in the day? Always a good conversation starter. So anyone that wants to get some leverage, try adding everything up in your house. It might be a bit painful.
And were you more of a spender or a saver through your, say, teenage years?
So I was definitely a spender. So if I earn £1,000 a month, I'd probably spend 1,100. So I had bad habits, I'd say, going through college. And then I went from college straight into full-time work. And then it was then where I still was probably a spender, because I was trying to keep up with my friends that are at university. They're going out a lot. And then I started to start looking at saving there, and have always been quite good at saving before I spend, is my mentality. If I get paid, I save. And then if I have to dip into savings to get to the end of the month, so be it. But usually end up taking the full savings. So it's almost the psychology of when you do it. But as I got older, I definitely got a lot better and more aware of the value of it. Because it's almost like delayed gratification as well. Like you save £50 and it's £50 today, but if you're compounding that or investing it in the right places, that £50 could be, well, as we're probably going to talk about today, could be significantly more if you pick the right asset at the right time.
So at what point did you decide to go down the route of becoming an IFA?
No, yes. So my journey is a little bit convoluted, I guess. So I worked initially with my father in his business. And then I did a stint in recruitment, which is where I then started, earning commission and such, and having volatility in my wages, which, then spending was a part of it. And also I started saving at that point. I then moved out and moved away from that and started a micro business. So it was a sports subscription business. I then sold that for not a significant amount of money. But it was during that process that I was then introduced to some stockbrokers. And then I was like, wow, this is cool. I already bought AIM shares when I was about 18 or 19. I used to trade some penny stocks. It was probably more gambling looking back at it now. And then I kind of was diving deeper as to what does this career look like? How can I get involved with what you guys are doing? I can see I loved the stock market at the time. So basically, the CEO then said, "Well, look, if you go away and get these qualifications, come back, and we'll give you a job." So that's exactly what I did. I went away for 3 months, got my qualifications to give financial advice, and then I spent 6 years, at stockbrokers, and I was qualified stockbroker throughout that time, managing high net worth investments, and also acting as corporate broker to a number of listed companies, including the likes of Coincilium, for example. I was broker to them in 2016 to 2022. So been around the space, and that was how I fell into that world, and instantly I just loved it. Yeah, doing the exams as well really opens your eye to interest rates, yield curves, why they exist, how they move, what they're related to. The real eye opener when you start to learn about finance in some depth.
Although I guess it's probably a good opportunity for us now to bring in the B word. So
Yeah.
obviously, at some point you discover Bitcoin. How jarring was that compared to the exams and the education you'd had going through your qualifications?
Yes, so I'd actually found Bitcoin before my exam. So I first came across Bitcoin quite early, so probably about 2013. I hadn't bought any at this point. I was just watching it, very aware of it. This is while I was in recruitment. I, like anyone, they say they had intent to buy it. In 2013, it wasn't easy to buy it, certainly at a younger age. So I was always aware of it. And then it wasn't until 2017 really that I started buying it in some weightings. And at this time, that was when I was at the stockbrokers. I then got the conflict of these investors asking me, what are you investing in? What opportunities are you seeing? Biting my tongue because I can't mention that most of my capital is going in Bitcoin, but I'm advising on these traditional stocks. So that was how I really fell into Bitcoin, and since then, I've always had most of my savings in Bitcoin, and I always see it as if I've got savings in dollars, and probably is not financial advice, but I see if I've got money in sterling or dollars, I'm essentially shorting Bitcoin, and so I've had that mindset for quite some time, and it's done me pretty well, really.
So how did you deal with that in your job then? Did you just almost compartmentalize it and say, look, I know because this is my career, I've just got to keep my gob shut because it's almost a reputational or even a, get hauled in front of HR type or the regulator type risk if you started to try and even talk about it? But
Yeah, well, so back then, so I had to get approval for any trades I was doing because I was a regulated individual, even Bitcoin. It may not have been a must-have, but certainly just to keep things clean, I was getting approval. So the company knew I was buying Bitcoin, and also I'm quite entrepreneurial. So what I did at the time was try to create, I guess, what is similar to Evoke today in a regulated environment under an FCA regulated company. The CEO was very on board, very aware of Bitcoin as well. So this is in 2018. We tried to essentially set up a division of the company. We got some advice from some consultants and FCA, consultants, and it was just too much of a minefield to even launch it. And the premise there was nothing other than, these high net worths want to get exposure to Bitcoin, but safely. So we were just going to try and find a way that we could hold custody and do it on their behalf. But it was an absolute minefield back then trying to navigate the regulations. And obviously we didn't have anywhere near the capital required to go through that. So it was quickly shut down. And then, since then it was always, if I met someone for lunch or something, we would talk about Bitcoin, the investors, but it's not right for me to advise them to buy Bitcoin, or even if they spoke to me about it. Unfortunately, I had to shut the conversations down pretty quickly. But then you started getting some equities out there, like Coincilium, for example, where there is some at arm's length exposure to Bitcoin or certainly blockchain. And you also had in 2017, when blockchain was getting big, you'd have people change their names to, mining blockchain PLC, just to get the liquidity. So there was still some games to be played on the equity side, even back then. It's the education piece of getting people in the mindset of this isn't a short term vision. Bitcoin is a long term investment. There's a lot of volatility, but also my belief is it's going to be going and continue going. It was still very hard to get that message across to some of these guys who are used to buying equities. They get in and out, they make good money, and they look for the next thing. It's about telling them that, this is where you really want to be putting your money, or equities that have exposure to this. So it was difficult, but it didn't really, I didn't see it as a conflict. I just saw it as just confirmation that I'm still early, still very early. You always feel like when you're buying Bitcoin, you're too late. Even in 2017, I remember thinking, it's at $3,000. It's like, I'm too late for this. I saw it go up from 300. You're never too late. The best time to buy it is today if you haven't got it.
And what were the main things that drew you in the first place? How did you find out about it? Was it something you read, or a podcast, or a YouTube, or something?
Yeah, I'm not sure how I first found out about it, because as I said, it was very early on. I was on Twitter back then, obviously, because I was watching small cap shares, so I was pretty much buying mining stocks back then. Wasn't really looking at fundamentals. I was just trading the liquidity and volumes. So I was on Twitter quite a lot. So I imagine that's how I came across Bitcoin. But I did have concerns when I first found it in 2013. Is the infrastructure of it? As I say, it was hard to buy then. Even when I first bought them, I bought my first, Bitcoin on localbitcoins.com, which I don't think exists anymore. And that was like a P2P escrow service where there's a lot of trust involved. So there was always that infrastructure that I felt wasn't in place, which kind of put me off. But then what really, as I started to learn about it, it was the supply and demand aspect that really sold me. This is a finite asset. No one else is going to make this anymore. There's no way for it to change. It's already pre-programmed. And I have the the mindset as well that if every millionaire wanted to buy Bitcoin, I'm sure you've heard this, there's only 21 million coins. So that was where I was like, right. So, I speak to 40 or 50 millionaires already. There's tens of thousands out there. And it was that kind of excited me.
I think there's 24, 25 million millionaires in America alone.
There we are. So 0.1 is,
I'm sure,
is the sweet spot.
Yeah. So, I mean, even if every millionaire in America woke up today and said, I'm going to buy one Bitcoin, they literally couldn't.
Yeah, exactly.
So and I think, again, going back to your point about you're never too late, I think we really suffer from the unit price bias, don't we? Because even if someone does understand what you can buy a pound's worth of Bitcoin if you want to, and because it's divisible by 100 million Satoshis, it's still that headline price of, £89,000 for one Bitcoin. That naturally will put a lot of people off, because they'll think, well, it's gone from like virtually nothing to that. I must be too late. But
exactly. It's almost like the Berkshire Hathaway story, because their shares were $90,000 or something, and then they had to create Berkshire B. But yeah, you feel like what you're really doing is getting exposure to it. You don't have to buy one Bitcoin. There'll come a time where one Bitcoin will be significantly out of reach for most people.
Yeah, in the end, it might just be Jeff Bezos that could afford to buy one. Although by then, if he hasn't bought any, maybe he won't be the only person that can buy one.
Yeah,
because but yeah, I think that's quite a hurdle for some people, because in a traditional sense, there's nothing else on the planet that is scarce in the same way Bitcoin is. So until you realize it's not a physical thing you're buying, it's a digital asset that is scarce, that ultimately, if it goes where Bitcoiners think it will go, is going to replace currencies and become the main store of wealth and means of payment globally. So the price in fiat, which is going down forever, is broadly irrelevant. But again, to someone, if that's the first conversation you have with someone who asks you about Bitcoin, you're going to blow their mind. It's how do you find, obviously you've been around in Bitcoin for a long time, you must get friends, family that ask you about it. What's your kind of softly approach into trying to explain to them what Bitcoin is?
Yeah, I mean, my friends and family will probably tell you that, between 2017 to 2020, I was, chewing their ear off every time to buy Bitcoin, get exposure to it. Now I'm beyond the point that I don't need to convince anyone to buy Bitcoin. But I do get asked about it. It's usually people ask me when it's at a high. It's all over the news, and they're asking, should I be buying some Bitcoin? But look, if you just read my text, 2 years ago or whatever, you know, there's no right or wrong time to buy it. I think. So I try and educate them. All I say to them is now it's just look, just go and do 2 or 3 hours of research on Bitcoin and come to your own decision. Don't ask me if you should buy Bitcoin. Just go out there, and all I'm saying is just read about it and come to your own decision, and you will come to the right decision. That's what I think everybody should do. If you don't understand it, read the white paper. Nowadays, chuck the white paper in ChatGPT and get a summary, and you'll start to get an idea as to why people are really passionate about this and can see the upside. The biggest thing I always say to people is, just do some research and then come back and let's have a real conversation about Bitcoin, and then I can justify helping them invest in it.
Yeah, I think I quite like to get the individual, if they're showing some interest and curiosity in it, I'll say to them, we'll just download Wallet of Satoshi and I'll send you a bit for free.
Yeah.
Then you've got some Bitcoin and you've got skin in the game, but you haven't put anything in yourself. And then do some research. If you send them £5 worth and they go, oh, I've got 5,000 sats or whatever, when they forget about it and come back in 6 months' time and have a look, they've still got 5,000 sats, but underneath that it says it's worth £7, and they're like, oh, you only gave me £5 worth, that's gone up a lot.
Yeah.
So all of those things quite help to reinforce.
Yeah, I did it years ago as well as a Secret Santa gift. I gifted a number of my colleagues crypto, and I put in a frame their QR code for their public wallet. Somewhere else was the seed that they had access to. And one of my regrets, because that 15, £20 budget is now a couple of £100 or whatever it is. So
Although to pull you up on one thing there, you did say crypto. So was that Bitcoin or was that something else you'd given?
It was Bitcoin, yeah.
Have you dabbled in other cryptos, or was your journey quite a straightforward one into Bitcoin?
So I started in Bitcoin. I've always had Bitcoin, and then I've only traded other cryptos to outperform Bitcoin, and very unsuccessfully, because it's hard to time market. NFTs, for example, for a couple of weeks I was making a lot, and then just as quick as I made it, it went. So I'm past that now. I don't hold any other cryptocurrencies. I do, I think some of them will be successful, but I'm only ever buying anything to outperform Bitcoin. Even my pension, I've got a really sad spreadsheet where my pension, everything is priced in Bitcoin. All my boring equities is priced in Bitcoin. The value of my house, I've got a spreadsheet that's priced in Bitcoin. I've got my net worth in Bitcoin. And I used to as well, several years ago, invest in rare Lego sets. And again, that was just, I would sell the Lego sets, buy more Bitcoin, and that's what I was trying to do, is always outperform Bitcoin, because like anyone else, I want as much as I can get of that rare asset.
I'm an accountant and I'm very sad and I love Excel. So yeah, that resonates with me. And I've been tracking probably since about 2020. I've got a sheet with all of my shares and of course there was a small amount for crypto, which back in sort of the late 2010s had other stuff in it. And then of course, increasingly it's become less and less crypto, then 100% Bitcoin. And then that bit, even though the amount of Bitcoin I've been buying has been growing and growing since then, because of things like your house and your pension that wasn't in strategy and other things back then.
Yeah.
And, if I then take the Bitcoin price all the way back, I was much richer in Bitcoin back in 2020 than I am today, even though I've been stacking, for the last 5-6 years.
Yeah.
So it is quite a sobering measure to put in those spreadsheets, I think.
Yeah, I mean, yeah, it does. But everyone I think at some point will have exposure to Bitcoin, and they'll all, people are becoming very aware of it. And I wouldn't be surprised if there's a lot of people, I imagine, that have that same mindset as us, that are pricing everything in Bitcoin. I even saw a tweet, I think the other day, where a guy was looking to buy a brand new car, and then he looked at the essential, the impacts if in Bitcoin terms over the next 5 years, and then it's you can beat yourself up about some previous spending. I mean, if I'd kept the initial Bitcoin that I bought, we probably wouldn't be talking today. But I've also need a roof over my head.
Yeah. And I think that's a really interesting conversation that doesn't happen enough in Bitcoin, which is what is the ultimate plan that you have for that Bitcoin? Because for some people, it's, well, I'm never selling, I'm just stacking, which is a strategy. I'm not being judgmental on that.
Yeah.
Everyone can do what they want. But like, to what end then? Is that going to die with you, like Michael Saylor said, which is great for Bitcoiners, but like for your family and loved ones, that's probably not ideal. And if you're going to hand it all over to them, then what makes you think they're going to do the same with it? You know, at some point, I can't remember which podcast it was on, but there was a phrase I'm probably going to get wrong anyway, but it was, you know, sell your Bitcoin when it can make a material change and improvement to your life. And that really resonated with me, because I thought, well, yeah, there is no point just continually stacking just for the sake of stacking. You have to, you know, whether it means you can go part-time in work a bit earlier or quit your job earlier to do things that matter more to you, go traveling, do, you know, whatever it may be. But just stacking onto it forever, I don't think is really a
Yeah.
strategy.
No, I agree. You know, there's times where you've got to sell it, and you know, we're seeing it now. You know, there's a lot of buying out there with, you know, Michael Saylor buying billions at a time. We're having all these treasury companies buying a lot of it. Those early Bitcoiners are selling it because, you know, they've got lives to live, and rightly so. You know, there shouldn't be shame in selling it if you need to live. I do think there'll come a time where you'll be able to borrow against it, you know, from some significant institutions, that's realistically what I'm waiting for. And then it's just having the plan in place to get it to the right people should you pass away, and then they can hopefully either sell it if they want, or reap the benefits and try and leverage it and, yeah, make it last longer.
And where do you sit with the view of kind of supporting fiat through getting loans and mortgages and things versus trying to be completely off fiat altogether, being debt free and just living your life on a Bitcoin standard?
Yeah, I think it's tough. I think it's very tough because, you know, even if you were to buy a house in this day and age with no debt, you're either renting, at which point your rent's going up significantly each year. I think it depends, obviously, in what situation. Let's say you've got a lot of equity in your house, and you're coming to a point where you're retiring in the next 10 or 15 years. I think then there's an argument. Well, you know, rent and make your equity that you've got work harder. Where it doesn't make sense is, you know, live in a tiny box for a decade while you're stacking Bitcoin and then still not sell your Bitcoin. There's a balance between the two. I think some fiat debt is good. Certainly, like you say, if it gives you time or increases your living standards, then it's almost a no-brainer. As long as you're not abusing it out there and getting yourself in financial trouble where you then got monthly bills that you're paying that is just debt you're paying back. That's when you're running on a negative there. So it's a fine balance, but it also, I think, it depends where you are in your life, and we've all got different responsibilities and dependents.
Yeah, I agree. And I think there's a bit of nuance around what the debt's for. So if you're getting into debt because you want to buy some designer clothes and have a nice holiday, that's probably not the best use of borrowing funds. If you're getting debt in the form of a mortgage to buy a family home, then and actually that debt is being secured against something that, because of money printing, is going to go up probably faster than the interest rate that you've got set against that asset. So, whereas of course, if you buy a car, say, with a 20 grand loan, as soon as you've got that car, it's worth less than what you paid for it, and it's going to keep depreciating. So
Exactly. Yeah.
again, you're taking out loan repayments against an asset that's reducing in value. So
Yeah.
makes a lot less sense.
Borrow to buy assets, not liabilities, basically. Even on the traditional finance world, you know, also people should be researching about that as well. I feel like, firstly, I think it's criminal that we don't teach that in schools. People should be financially savvy when they leave school. Teach them about mortgage rates. My first mortgage was a ridiculous rate that after 2 years, I don't think I'd even touched the debt that was on it. Yeah, being financially savvy, even a little bit, opens your eyes to really what's going on, and the path that I think we're all inevitably going to go down. And then that is ultimately going to lead you to Bitcoin.
Yeah. Or vice versa often. So often when people start to learn about Bitcoin, part of that journey is, well, what is money? What's the history of money? And you learn about, you know, seashells and precious metals and gold, then currencies being pegged to gold and then being depegged and printed. And it kind of, if you weren't aware of that, it's completely mind blowing.
Yeah.
And again, the inevitable path takes you to the value that Bitcoin has, whereas to someone that doesn't know that history, I would just say, well, you can't see it, you can't feel it, you can't touch it. It can't be real.
Yeah.
So let's move on to Evoke then. So let's do you want to give a brief summary of what the business is and where you plan to take
Yeah,
it?
sure. I mean, so the mission is kind of what we've touched on today, is to protect Bitcoin's legacy. And so Evoke are, we're building products to help with inheritance and continuity for businesses. And so we're soon to launch, for example, our retail platform, which will enable a client to go on there and they can have an Evoke multi-sig wallet, or they can track all of their other wallets, and that might be a Coinbase wallet, single hardware wallet. Tracks all those. You can then nominate your heirs, and you can nominate them to each wallet if you've got a wallet for your children, for example. And then there's additional features in there, which I won't go into just yet. But ultimately, once you've gone through that process, it produces a document that you can then plug and put into your will, and then you'll update that, keep it updated. And then there's different tiers where we've got one tier that we're looking at, which is very hands-on, almost private banking-esque, that we help with your inheritance. We would onboard your heirs so they know what the unhappy path looks like, and that we're there to support and help recover those assets. And then on the business front, it's quite similar. We're building a platform so that a Bitcoin treasury company, for example, has all of the auditing and reporting in one place. They can invite external stakeholders to see audit trails, policies, etc. So currently we're in full build mode, and our retail platform should be out in probably in the next 3 months. And then we've got a number of products that we're still working on, which are kind of still in stealth mode. But it's all around, the inheritance side of Bitcoin, and making sure that it doesn't die with us, it carries on, really.
So on the retail side, is this only likely to be kind of high net worth individuals, or is there some kind of threshold where someone with 0.1 Bitcoin or whatever might still be able to make use of your services?
Yeah, they definitely could. I mean, it's not a free service, so the economics will need to work. It's certainly not, I don't think it's expensive. I think we've priced it right, but we are trying to capture a broad audience. We have a tier for high net worth, and that's if you're then talking significant amounts of Bitcoin, where even you might have trusts and etc. But we've tried to make it, firstly, custody agnostic. So it doesn't matter who you hold it with, you can still track those wallets. And we're never asking for, private seeds here. It's more just documenting where you're holding it. And then, should you pass away, it's then helping step in and recover that with your solicitors and your heirs to say. And it might even be as mundane as, look, they had assets on a Trezor wallet. They told us it was this model. This is what it looks like. If you find this, then come back to us, and then we'll help them use that. Recover those assets from that specific wallet. And that's the vision. As I say, it's still a lot of moving parts internally. There's regulatory hurdles that we're still going through. But I'd say before the end of the year, we're hoping to have that live and available to anyone really that's holding any amount.
So is there an element of education on that though? So if someone comes to you and says, I've got 25 Bitcoin sitting on Binance, would you say, okay, here's just fill in this form? Or would you say, whoa, have you really thought about whether that's a clever thing to do?
So, I mean, if someone's got that much Bitcoin on Binance, they'll get an account manager, and then it's an education piece of these are the solutions that we would recommend. Firstly, one would be probably multi-sig for your long-term pot that you're not going to touch often. Then there's a place for a single hardware wallet for your short-term spending, and then your immediate spending. Leave some on an exchange. I think there's a place for that. But certainly, if someone ever told me they've got 25 Bitcoin on an exchange, that's alarm bells, because it's a ticking time bomb, I think, on any exchange.
Yeah. I suspect these days it would be reasonably rare, because someone who's got that amount of Bitcoin sitting on exchange, I'm sure by now they'd realise that wasn't a very clever thing to do. But I guess it's that sliding scale though, isn't it? Because if someone comes and says, I've got £1,000 worth of Bitcoin sitting on Binance, actually just getting a hardware wallet is going to cost them at least 10% of what they're stash is worth anyway.
Exactly.
So all of these things are kind of relative and a sliding scale, and and down to very personal, individual preference. Do
Exactly.
you
Yeah.
stand by the quite common people will say you should look after your Bitcoin as if it's worth 10 times what it's actually worth today? Do you?
100%. Yeah. Yeah.
Yeah.
It's, yeah, 100%. You've got a plan for the future. I think, everyone has in their mind where they think Bitcoin's going and when. And, that's how you got to treat it. I treat my Bitcoin, like a pension that I'm self custodying. And, I've got I like to think I've got a very secure setup. And even there's weaknesses in my setup where if I ask my wife, for example, where's my Bitcoin, she's realistically not going to be able to give a detailed answer, which is also, I could go through the Evoke platform, I could update my wallet stats. I don't necessarily need to tell her, but if I pass away and don't respond to a liveness check that's also built into the platform, it'll then go to my solicitor to say we're aware that Alan has some assets that we may help recover. And then it's just notifying that those assets are somewhere else. If it's just held on Coinbase, it's quite easy. They can just do a check probably through national insurance numbers. But it's where someone's got an amount where they are conscious that they need to self custody or so, then it gets a lot more difficult to track what happens then in the inheritance. And there's a huge education piece, not just for retail, but also for the professional services sector, the IFAs, the solicitors. They are having conversations with people talking about hardware wallets and such, and are they best placed to store that information? They certainly don't want a private seed because then they're essentially holding custody. It's what information do they need and what is enough information, but not too much information. We're trying to help with that as well. So there is plans as well to have a distribution channel for professional services as well in that Evoke ecosystem.
And your target customers, UK or UK, Europe, global?
So predominantly UK, and the reason being is because the document ultimately that they get at the end of that process, which is regularly updated, we are working to have that as a formal document that can then be widely accepted across UK solicitors. We certainly have full intention to go international when the time's right, and the product is so that it's almost a lift and shift. It's not a huge shift to open up that international market, but the UK market is so big anyway, and I think so underserved in that inheritance space that we think there's a huge opportunity there already.
Yeah. Do you think the inheritance side of Bitcoin is just become a bit more live and vocal this cycle? It's just the volume of people that are getting older that have got more Bitcoin that's worth a lot more money are starting to think, I need to now take this more seriously than maybe I did 8 years ago.
Yeah, definitely, because Bitcoiners are getting older. Those that adopted it early are getting older, and those that are already older are becoming more wise to Bitcoin. Bitcoin is going to eventually find every age and every risk appetite. So certainly, yeah, you're also um, we're in the institutional phase now of Bitcoin. We're certainly through I think the first door of that. And with that comes professional services companies trying to build it into their business model. There will come a time where if an IFA doesn't have appetite or facilitate exposure to Bitcoin, they're going to get left behind. And that all then pushes the longevity of it as to what does happen with the inheritance. Is there a plan for your Bitcoin? And the vast majority of people don't have a sufficient plan. They just, even if you've left a seed code somewhere where your wife knows or your partner knows, and they know where the hardware wallet is, that's one thing. But do they know what to do with that? Can they realistically go to anyone with those two pieces and trust them? I would say not. You need to do that on your own. You need to have the education to be able to do that on your own. And that's what we're trying to do here. So yeah, I think it's a huge topic, and I think it's one it's only going to get bigger.
Yeah, definitely. I agree. And when it comes to the Bitcoin treasury companies, there's quite a lot of noise in the Bitcoin space about them being able to publicly demonstrate their proof of holdings. What's your take on that? And is that something that Evoke could potentially help with, or is that something completely different?
Yeah, I mean, it's something that we've definitely thought of. We've thought of showing proof of reserves if somebody holds Bitcoin in one of our wallets, or even on we call it the enterprise platform. We would eventually link into custodians. It wouldn't make sense for a public Bitcoin treasury, for example, to hold Bitcoin with Evoke because we're not backed by insurance. massive institutions there that are more suitable for that model. So I think the proof of reserves, it's really topical. I get Michael Saylor's view in that it opens risk, just showing your wallets opens risk. But that's not to say that a third party, a PwC, a Deloitte, cannot step in and do that for companies. I think it will eventually come to it where you have to. And I think that's a good place to be, because we might have it where Bitcoin treasury companies own 22 million Bitcoin. And then we're like, well, what happens to the valuation of them then? And then the only ones that are going to hold their valuation are the ones that can show proof of reserve. So I do think it will come to a point where, whether you like it or not, you're going to have to show proof of reserve. I think it's healthy, but I think it needs to be, has a lot of thought about it and managed appropriately. You know, if it was me, for example, I'd probably realistically do it through the big four, through whoever your auditors are, and have them document something. It's whether or not they want to get involved in that. Some of them still have the very TradFi vision, and Bitcoin for them is still an inconvenience. So I think they might get left short as well if someone else steps in to audit that side of things.
Part of my theory on that is, traditional finance, whether that be accountants, IFAs, whatever, fund managers, if they can't easily get paid by recommending Bitcoin. The FCA don't let them say to clients, put 10% in Bitcoin, but let's just follow that logic. If they could, then that client is taking 10% of their net worth away from the assets under management, so that IFA earns 10% less commission, if you like, on the or fee on the assets that are held. But I guess if you fast forward and start talking about proof of reserves and, auditors being able to actually earn a fee from providing that service, maybe some of those things might be the conduit to them saying, okay, yeah, maybe we'll jump on this Bitcoin train after all, because there are some fees there for us.
Yeah, I think that industry will develop as well. You've got ETFs, which will probably fall into that to a big degree. But then also, I think eventually you may have IFAs that can hold a pot with a custodian on behalf of their clients, and they can take their fee from the assets under management there. I think that's inevitable. I don't think it's anytime soon, but I do think that's where the world will eventually go.
I guess the game theory could play out there, because even if, again, let's, for the sake of the discussion, let's say they get 0.1% on that and get 1% on the traditional assets under management. But if that 0.1% goes from being 5% of someone's net worth to 50% because of the price accretion of Bitcoin, over time, that can suddenly become, thank God we did this, because without it, either our client would have gone somewhere else that were offering that service, or effectively the value of everything else is going down. So we'd have been losing money on that 1% we were earning under the assets anyway. So I think game theory is a big catalyst for that in the coming years.
Yeah, definitely. I mean, I've been an IFA before, and my mindset, if I was in that situation, is if I'm buying something and holding it, why am I paying a percentage? I'll happily pay a custody fee, so give me a fixed fee and add a bit of risk fee on that as well. But otherwise, I don't want them charging a percentage of an asset that I've chosen to hold. And unless you're trading in and out of it, I think it's different. Yeah. Otherwise, I'm not sure how gold works. I bought gold previously years ago, but if you're holding gold, do they charge a percentage of how much gold you've got, or do they just charge a custody fee for you to hold it? I'm not too sure, but I think that's where it'll hopefully end up as well. Otherwise, we'll all have expensive bills if we're doing it that way.
Do you have any concerns around paper Bitcoin, or is it more that, not as a general concept, but maybe some specific players that aren't playing by the rules, as it were, they may come unstuck, but as a general principle, paper Bitcoin is not a bad thing for Bitcoin?
I don't know. I mean, I think at the moment it's not something that I'm in favor of. I think, get direct exposure, show proof of reserves, keep it as transparent as possible. I think the space will develop, but yeah, I think if we can keep it as straightforward and easy as possible and cut that out, I think, yeah, I'm not convinced that that's the right route to go down. I could be wrong. I haven't put an awful lot of thought into it, but I'm not a huge fan of that, if I'm honest.
And what's your thoughts on the theory, again, another thing that's being discussed in the space around, are the 4-year cycles dead now that institutions and even governments potentially are going to be buying Bitcoin? Then, the concept of the halvings and stuff just makes no difference now. It's just all going in one direction, and we won't see a
Yeah.
bear market again.
I think the bear markets have just changed. I still think the 4-year cycle is going to be there. I think it's just less. There's less volatility. What you might like a bear cycle now, for example, might be Bitcoin just stagnates for a period of time, and then you get the explosive movements. I certainly don't think we're going to be having significant pullbacks. But a lot of that volatility, I think, has been killed on the downside because there's so much demand as well to buy. But I still think the halving is going to have quite a significant impact. I mean, you just look at the breakdown of how much Bitcoin chops and chops and chops and chops in a decade or so. That still has to have a significant impact. Certainly, if the buying power is as it is today and carries on, the halving, if not more than market psychology, I think it will still have an impact. And I can't see where it doesn't really. I think it's just ultimately over time the volatility will reduce and keep reducing, which may pull other people away because a lot of people are investing in the space for the volatility. A lot of these treasury companies, they win off of the volatility, certainly off of the volatility of their equities as well. So volatility is good in the space. So I'm hoping on the downside it's somewhat reduced, and on the upside we've got a long way to go, I think.
Yeah. And what do you think is the biggest risk to Bitcoin, if any?
So I think it is the institutional adoption. You only need one of these treasury companies to have an error, a reporting error. A bad person could bring this down. Certainly in the UK where it's in its infancy, I think that is what could cause problems in future. If you've got a company that have, let's say for example that MicroStrategy, it comes out they do approve for reserves, and in reality they've only got 30,000 Bitcoin. That's going to cause a lot of problems.
But if you play that out though, Alan, like if you're a MicroStrategy, if you're a strategy shareholder, which I am, that is cataclysmic, and like any of those shares you've got are going to be worth probably nothing. However, for Bitcoin itself, is it really is it a risk for Bitcoin in the sense that it's a bit like the FTX? It was it was bad for the general sentiment of the Bitcoin, but actually it didn't break Bitcoin. The FTX scandal, which is what it was effectively, Bitcoin carried on working. It produced a new block every 10 minutes, and it was just more of a sentiment. I think the similar, I try and play that scenario in my head too, around if strategy were to come out with proof of reserves and not have what they claim they have, I think it would have an impact on the Bitcoin price, but I also think it would recover on the basis that the Bitcoin's still there. It just isn't sitting with MicroStrategy.
Yeah, it's a double-edged sword. I mean, I always keep my Bitcoin in self-custody because, let's say that does happen. You're right. Bitcoin is still going to be there. Bitcoin will recover. The equities, they may also recover and they may repair that. But what will happen is the regulatory ripple of that, it may come to it, and I don't know if it's extreme, but the ETFs may immediately stop trading. And then it's right. So I had a couple of $100,000 in an ETF that I now don't have access to.
Yeah. Yeah.
Did I even own that Bitcoin? Can I claim that Bitcoin back? Do I get sterling back? If Bitcoin moves after they've stopped trading, do I get the upside of that Bitcoin? For me, I take all that risk away, and that's why I always hold it self-custody, because
Yeah.
the unhappy path in the public side can actually be quite bad. So I think it's more just the regulation will increase, and the eyes that we don't really want on it will have more eyes on it. And it just pushes the strength for self-custody ultimately in the long run.
Yeah, no, I completely agree. Again, the only nuance I would throw in there is if you're someone that's got a reasonable amount of their net worth tied up in a pension,
Yeah.
there are ways to try and do self-custody, but it's expensive and complicated and not really for everyone. So for a lot of people, me included, those options are the treasury companies, and when it comes at some point in the UK, a Bitcoin ETF. But I completely agree with the criticism or concerns, which are at some point a government or whatever might just say, we are seizing this and you're getting the you're getting the value of what it is at this point in time. So, and again, to a lot of investors that aren't really Bitcoiners, that's probably what they want anyway. They've bought a share price at £2, it goes up to £4. they've doubled their money, they're happy, they'll go and buy that car or have a holiday or get a bigger house, whatever. But of course, as you've articulated to a Bitcoiner, you want the sats, and you want those sats, not the pound equivalent, because you know what's coming in the future, and you want to be able to keep hold of those with no one coming to you and saying, we're going to take those off you and exchange it for something else.
Yeah, exactly. And, that's why Bitcoin was created ultimately. You read the white paper and you read Satoshi's early notes. That's why it was created, to step away from the financial system. But you're right. There's an awful lot in pensions and ISAs that is in those tax wrappers, that it's hard or expensive to get out, and there's always going to be a need to have some exposure somewhere. And I hope that there's always the ability, and I think there always will be. So I think we're way past that. I think it's not that we'll lose the access. I think it's just the regulation would increase, and with that, there's probably costs that would increase to whatever we're doing, unless it's straight equities that have exposure like treasury companies.
Yeah. I think the ISA debate is slightly more interesting in the sense that that is an active choice that one makes, because you can, if you've got 10 grand in an ISA, you can choose to close that ISA down. You've got no tax issues at all. You take that £10,000 out, you buy £10,000 worth of Bitcoin, self-custody. There you go. You've closed down your ISA and you bought your Bitcoin, which you can't do with your pension. But of course, you've then got, if that Bitcoin goes up in price and you need access to sell it, you got capital gains tax.
Yeah.
Whereas, of course, everything that sits in an ISA is tax-free, which, again, for some Bitcoiners is a dirty conversation because, all tax is theft, et cetera, but these are real kind of conundrums that someone who's got half a foot in TradFi, or quarter of a foot in TradFi, 3/4 of a foot in Bitcoin, they're real kind of conundrums and decisions that need to be made, aren't they?
Yeah, definitely. And that's why I love that these treasury companies are out there, because it's made the ISAs more exciting, and we're ultimately trying to outperform Bitcoin, and the Bitcoin treasuries increase our odds of doing that massively. So yeah, it's good, and I'm glad that we finally got them in the UK. And huge kudos to Andrew for what he's done for the space.
Definitely. And of course, back to your point earlier about when you tried to trade other cryptos to just get more Bitcoin, some people might, again, it's a high risk strategy and this is not financial advice, but some people will have almost certainly, got involved with the Smarter Web Company IPO in an ISA, seen that increase significantly, and then it's their choice. They could take some of that money out and buy spot Bitcoin. So they've used the traditional tax-free wrapper of an ISA and the accretive benefit of a Bitcoin treasury company in order to grow their fiat to buy more sats than if they just bought those sats in the first place and hadn't partaken in the IPO. So it's never black and white. It's never black and white. So when it comes to your approach for passing on your wealth, again, I'm not going to ask for personal details, but you're a family man. What's your view on the extent to which you could improve your life with Bitcoin and improve the life of your family, maybe friends, whatever, versus trying to pass on as much wealth to future generations?
If I had enough Bitcoin, what I would do, not financial advice, is I'd put it in a trust and have some rules around that trust that they can certain times or monthly, whatever, draw down percentages. I think that will happen. I think that probably is already happening for ultra high net worths. If you just fill a trust somehow with Bitcoin, you're going to get that significant wealth that's going to outlive them, hopefully, because it's still appreciating the asset. And I think there's a huge opportunity there. That's what I'd love to do. If I got to that amount of Bitcoin, put it in a trust, have some strict rules around it, and just know that they're being looked after, and hopefully their kids and their kids are getting looked after.
Yeah, there's also that concern that if your children don't have the same outlook as you do, they might spend it all on drink, drugs, rock and roll, and then waste the rest.
Yeah. You don't want to make it too easy. You almost want the Bill Gates mindset of, look, we'll give you enough so you don't struggle. Although I think he bought his daughter like a £20 million flat, but
only 20 million.
I think so. Yeah.
So tight.
Yeah, exactly. You give them a little bit. You don't want to give them too much. They still need to have the fire and the will to want to work. But you'll take the struggle out of, not having any money. The worst feeling, as we all know, is not having any money. And then having money, the feeling doesn't really change. You kind of take the worst part out of it.
I like to think there'll be some future generations that will follow their heart and their passion and their desire, but maybe in less traditional ways that are financially remunerated and more through vocational or creative aspects, because they can afford to do that because
Yeah.
they've got, and I know that could happen now because some multimillionaire can leave their kids a fortune in property, money, whatever, and they can decide to, be some ambassador in India helping kids learn English or whatever. And that, again, that's great, but not many people can afford to do that. Whereas I guess maybe there might be more likelihood of generations of sons and daughters of Bitcoiners that maybe can do those sorts of things more easily.
Yeah, it almost feels like you kind of had the generation where there was the land grab, and then you've got some people today that are landed gentry. You've kind of got that now where the accumulation of Bitcoin, and hopefully your future families are somewhat self-sufficient on their Bitcoin. So we're kind of going through a whole new phase again. That's really interesting.
It is, but then there's also that other side to me, without wanting to sound like a socialist, but you then worry that we're just creating a similar problem that we've got now, but we're just on the right side of it. Yeah. So, for everyone who hasn't got Bitcoin, have fun staying poor. Unlucky, you should have done what we told you to do, but we're okay. You guys aren't. But yeah, I think, but I also think as a counter to that, if sound money is implemented again like it used to be as Bitcoin, then even the people that have nothing now, when they work and store their wealth in Bitcoin, then they're accumulating wealth. Whereas right now that isn't the case. So even someone who's got no Bitcoin in 5-10 years time, it's not like, well, you're too late. You missed the boat. You've got no chance of catching up. Bitcoin welcomes you at whatever point in your life that you find it, I guess.
Yeah. I mean, the real Bitcoiners are still buying it even today. Always buy the top, like Michael Saylor says. It's having exposure to it. That's where the upside is. Not necessarily having one Bitcoin. It's being in Bitcoin, not just having one of them.
Well, it's been great meeting you and finding out about your journey and a bit more about the exciting business plans that are coming up. Where's the best places for people to find you if they want to reach out to you?
Yeah, so I'm on X. So my personal X is at Alan Evoke. And then if they want to follow the Evoke journey, it's Evoke_Solutions on X as well.
Okay, great. And presumably as Evoke develops in the coming kind of weeks and months, there'll be a bit more activity and people will be able to see what kind of options there might be for them if they're interested in some of those services. Yeah,
definitely. We're going to start putting a few teasers out there. We're I think we've got our first testers on it back end of next week. So there's a lot happening, and there'll be a lot of news flow coming out in the next couple of months. And then, as I say, we're hoping to launch the retail platform within the next 3 months. We'll try and get a bit of news and scream and shout about that. If anyone is interested and wants to talk more, feel free to message me. I'm always happy to jump on and have conversations with various people of different appetites, really.
That's great. Well, I'm sure everyone listening, as well as me, will wish you all the best with that, because it sounds like a really something that the UK needs, and wish you all the best. Before I let you go, the last question I ask all my guests is, what's one belief you held before Bitcoin that you've completely changed your mind about?
Before Bitcoin, I felt that the traditional finance world was a smooth path, as in, you buy a house, you get a loan in your house. It's an easy path. It's one that is low risk and worked for hundreds of years or whatever. That's, I think, the biggest lesson is I can see a broken system now where I couldn't see before. So it certainly opened my eyes to the weaknesses in our economy, the global economy, really. Before, I thought, saw the world through rose-tinted glasses. And it certainly opened my eyes to what's really going on and the dangers that global debt is bringing us. Yeah, that's good answer. Well, thanks again for coming on. Great to meet you, and we'll hopefully catch up again soon. Really appreciate it, Gary. Thanks a lot. Cheers, Alan. Bye.